Okay, welcome to part 4, the final part of the big money, professional money, smart money cycle. And that, of course, when we've had a down move, there has to be some strength coming back into the market, some potential strength. The market consolidates and then moves back to the upside. Now, this is obviously the opposite. All of this price action is going to be the opposite to the potential weakness. So whereas we had potential weakness before with selling pressure, the opposite of that is buying pressure. Where we had the up thrust, we're going to see the market test for any further selling. And then the opposite of the telegraph pole is the pogo stick. And there you can see these here. We've got buying pressure, the test, and the pogo stick. And we're going to look at all of these in isolation in just a moment. Again, you'll see that the gap down on the open bar is not explained because, again, we haven't got that situation where the markets are closed overnight anymore, so we don't tend to see these gaps anymore. So again, I'm not going to cover that in these videos. So let's move on and have a look at the first one, which is buying pressure. As we already discussed, this is the opposite of selling pressure. So you've got the market selling, and we know it's selling because we've got big widespread price bars moving to the downside. We've got the selling in the market, and then as the market moves lower, the professionals say, do you know what, we're reaching a pivot point, a support area, psychological area. So what we're going to do is to start taking profits and reverse the market. And what you get here is that the volume is very high and the range of the bar is narrower than the previous selling bar. So if we look at this example on the chart here, you can see that we've got selling here, we've got the buying pressure here, the volume is greater, the range is narrower, we're sitting at the low on a pivot point from the previous day. The market then puts in a buy signal and we move higher, reversing the previous trend. Again, if you weren't aware of these types of price bars, you'll be sitting looking at this and you'd think, oh, right, we're about to break to the downside now because, the market's come back and it's no demand. But then it does the opposite and moves back to the upside and then trades through the DP level as well. So this is why it's important to know why a market stops and what is actually stopping the market from moving lower as well. So buying pressure, the opposite of selling pressure in an up move. The opposite of an up thrust in an up move is the test bar in the down move. So what is a test bar? Well, a test bar sees the market having the selling prior to it. Then the market will open, prices will be thrust down to the downside, and if there's no more selling or they find buying, the market will then reverse and come back up. And we see this in both high volume and low volume bars as well. So looking to the right, we've got the selling coming into the market, driving through the pivots. We just get through to the R1, sorry, not the R1, the support one here. We see the selling come through and all of a sudden the market is tested. And you'll see a lot of tests here at this level in between, which is unusual, in between the two pivots here, and the market then is driven back but finds resistance before we then see the selling come back into the market because the market's switched. We're below the DP in this market now, so we know we're slightly bearish. We then see the selling coming through again, we're back through the DP, and then we get the buying at the support one. Very high volume test bar. And in this example again, the market's still bearish because we're below the DP level. We see the selling coming in at the DP level at the start of the next session. And then we get buying pressure there. You can see the buying pressure. Then we get the test. Then we get the market moving back to the upside. And over here we'll see some buying coming in as well at the support one there, but back through the DP, so some selling and downside pressure. So say once you get the concept of these and understand them, and they're not that difficult to understand, you will be able to read the markets very easily indeed. And then finally, we've got selling that can be followed by the pogo stick on high and low volume. This is the opposite of a telegraph pole in an up move where you've got the potential weakness, you've got potential strength here. Prices are thrust up, but then are met with selling and the market's brought back, but the selling disappears and then the market is free to move higher. And again, they can be on high or low volume. So here's an example here. We've got the selling in the market. We get the pogo stick. It's sitting on the S2, support 2. The market then moves back to the upside. And over here, we've got the market finding support at the low of the previous day. There's no more selling around. You can see there's low volume. The market comes back down to the low retest with you've got the potential strength there in the market before the market moves back to the upside there as well. So again, identifying these price bars allows us to actually form an opinion and a view about what is likely to happen next, and in combination with the pivot points and averages and anything else that you're using, you can really obtain an edge in reading the markets and what it's likely to do going forwards. Okay, that's it for the potential strength price bars. Again, we've covered an awful lot in this, and again, don't be too concerned if you haven't quite grasped the concept, because I will be pointing these out in the market alerts and why the action was happening at those particular levels, and again, which phase the market was in. But the software does a lot of it for you. It's just understanding that there's simple phases of the market. You've either got demand to the market moving higher, followed by potential weakness, then the market resuming the upside. But when the trend does change and we end up with professional selling bars, then you're going to be looking for potential strength. And you can identify both of those up moves by looking at the price action. If it's above the DP, the daily pivot line, then it's going to be more likely to be bullish, and you look any potential weakness will happen in areas where you've got the resistance 1, 2, 3 and the previous day's high or close, and then conversely the opposite in the down move. If you're getting selling bars below the daily pivot, then it's definitely bearish, and then look for potential strength at the support 1, 2, 3 and also the previous day's low and close. It's really that simple. And that's the way it gives you the added advantage and trading edge. And then, of course, if you combine that with where the action is happening with regards to the averages as well, then you will get a further edge. And then also you can layer on top of that the Fibonacci retracements in those areas where the pivot points are, potential weakness, da-di-da-di-da, it just goes on. But you become incredibly fluent in actually reading what's going on and identifying it. And the good news is, in all of this, what's taken me 25, 26 years to put all of this together, you're getting it in a 10-minute video and a daily video to reinforce what it is that I've also shown you here as well. Okay, that's it for this one and the subject of the test bars. As I've said before, there'll be a lot more information on this going forward, but this is just the overview of it. So with that, I will conclude here, and as ever, thanks for watching. See you in the next video.